Good afternoon, everyone. I am Chartered Accountant Neha Midithya. On behalf of Women and Young Member Committee, Excellence Committee of ICI, welcome you all in Sky High Symposium-64. Sky High Symposium is a Wednesday series of programs conducted by the committee for the women and the young members. It is one of the Women and Young Member Excellence Committee's initiative to not only disseminate the information to members on technical updation and non-technical areas, but also to empower and inspire them to come at forefront and realize their verbal skills at the public forums. Today, we are going to cover session on reverse charge mechanism under GST and investment horizons. And for this, we have one of the two very eminent speakers with us. We welcome you, ma'am, Dimple Kotak and Kenjal Shah. Both the speakers are with us, and we welcome you on the behalf of the committee. Our committee chairperson, Priti Salvi ma'am, and Abhay sir, vice chairman of the committee. We also welcome you, sir, and all the coordinators in the program. CA Garjana ma'am, CA Rachna ma'am, CA Varsha ma'am. We are very happy to have you. And for our first session, I would like to welcome Dimple ma'am. CA Dimple Kotak ma'am is an associate chartered accountant. She practices in Gandhidham, Gujarat. She is young member of ICAI. She practices in the areas of income tax, GST, audit for corporate and non-corporate entities. Apart from this, her excellence is in the field of bank audits. She participated as a faculty for direct taxation in TEL program organized by Gandhidham branch of WIRC, which provided training to graduate and non-graduate students of commerce. She had been a speaker at webinar organized by Women and Young Members Excellence Committee on provisions of direct taxes. She provided her service as an anchor for 75th Chartered Accountants Fest at Gandhidham. So, ma'am, we would like to have the great knowledge on the topic like RCM. It's a very challenging and demanding content for the young and chartered accountants who are doing practice in the areas of GST. Over to you, ma'am.
Good evening, everyone. Yes, this topic is very challenging and demanding. Let's move to the topic. Our roadmap will be what is reverse charge mechanism, then the services and goods which are taxable in reverse charge mechanism, and we will discuss more deeply in GTA because that is very important aspect which is widely used in our practice. So we will have knowledge on GTA services, and then we will discuss practicality, the accounting aspect of RCM. So let's start with the first topic. What is reverse charge mechanism? Usually, people who consume goods, who consume services, they do not pay taxes to the government directly, right? Like if we purchase a mobile phone, we do not pay the taxes to the government. The receiver do not pay the taxes to the government, right? So this is called forward charge mechanism. The supplier who supplies the goods or services will pay taxes to the government. They collect from us, but they do not. They collect from us and they pay to the government. So this is a forward charge mechanism. But in the reverse charge mechanism, the one who receives the goods or services will pay the taxes directly to the government and not to the supplier. So it's a reverse charge mechanism. Usually, forward charge mechanism is everywhere, but on few goods or few services, a reverse charge is there. There are 8 goods on which a reverse charge mechanism is applicable. we will see what are those 8 goods, right? So if an agriculturist supplies the goods like raw cotton, silk yarn, or tobacco leaves, or beedi leaves, or uh, tobacco leaves, beedi leaves, silk yarn, raw cotton, तो उन सब पे रिवर्स चार्ज मैकेनिज्म अप्लाई होगा. रिवर्स चार्ज एग्रीकल्चरिस्ट किसको कहते हैं? तो द पर्सन whose land is there and who grows those products and sell it further for the consumption. The one who hires the labor and who works personally, or who hires or and paid those labors and provide this goods to further consumption. So agriculturist is the one, and he will supply these products, then it will be covered under reverse charge mechanism. These are 4 goods which are supplied by the agriculturist. Then further we have in those 8 goods are supply of the lottery tickets by the government, central government or state government. If they supply lottery tickets, and on it's the reverse charge mechanism. Then we have some confiscated goods, used goods. With on supply of these goods also, reverse charge mechanism is there. Then these are the goods on which a reverse charge mechanism is applicable. Then one more thing, which is a primary sector lending certificate. On this also a reverse charge mechanism is applicable. Now, what is a PSLC certificate? So PSLC certificate, primary sector lending certificate. Primary sectors, which are the primary sectors? So we can say the basic needs of the human are the called as primary sector, like agriculture, health, medicine, healthcare services, agriculture services, education. These are called the primary sector. Or every bank have to give certain percentage of their advances to these primary sectors. So they are allotted a target to give advances to this primary sector. If one bank doesn't fulfill their target, then they purchase a certificate from the bank which have completed this target. So they purchase this certificate from the another bank. So this is a service. This is a goods certificate which is taxable under the reverse charge mechanism. So this is about all the goods which are chargeable under the reverse charge mechanism. Basically, these provision gives the relaxation to the person who is not able to comply all these provisions related compliance related aspects, like agriculturist. There is no burden on the farmer for this thing to comply and all these procedure. So this is a reverse charge mechanism on goods. We have discussed 8 goods on which the reverse charge mechanism is applicable. Now we will move to the services which are under the reverse charge mechanism. There are total 23 services on which reverse charge mechanism is applicable, but among them a few services are very widely used for in our practice or in general public, because few services are like they are not that much usable by each and every person. So we will more discuss on the services which are widely used by everyone, which come across in our daily practice area. So first we will discuss what are those 23 services. So first one is import services. Import of these services from the foreign countries, right? Import of these services. Then insurance agent services, then recovery agent services, ocean freight. Then we will then services like business facilitator. Banks use these 3-4 types of people: recovery agents, business facilitator, business correspondent, then DSA, इंडिविजुअल DSA, डायरेक्ट सेलिंग एजेंट, जो लोग हमको कहते हैं कि आप अकाउंट खुलवा लीजिए, जो हमारे पास आते हैं, सारी डॉक्यूमेंटेशन प्रोसीजर करते हैं. Usually you may know the person who has given a target to open number of accounts or to get the a fixed amount of investment. These are the direct selling agent. Services of that is under the reverse charge mechanism. Then there is a services of the arbitral tribunal services. This is a private institution which provides the resolution services, like not courts or that, but these are another organizations which give these services. So arbitral tribunal services are there. Then there is one more widely used are services, which we come across in our practice, services of the directors. The person who is a director in the company, then if company gives the remuneration to that director, then a company have to pay GST on the remuneration given to that director. There is a provision in that the director must not be the employee of the company. He must receive remuneration of fees, like independent director. Independent director receives the remuneration. He is not the employee of the company. Then the remuneration paid to that director, government company has to charge the GST on that and pay to the government. So director services are one of these which we come across in our practice, because major constitution company everyone faces. Then there is a GTA services, goods transportation agency services. This is most widely used sector which come across in most of everyone's practice. We will discuss deeply in this GTA services later. First, we complete all the 23 services. Then it's a renting of the passenger vehicle. It's also in the reverse charge mechanism. Then renting of the immovable properties which is owned by the government. Then all the services provided by the government are on the reverse charge mechanism except three. Which are these 3 services? So then one is post office services. We may have all accounts in the post office. We deposit amount in that. Speed post service is provided by the post office. Then this airport services which is provided by the government, and transportation services like rails, train services. These all are under the forward charge mechanism. Rest other services which is provided by the government are under the reverse charge mechanism. Then services of we said transferable development rights. Someone has have land, they are the owner of the land, but to develop that land, to construct a residential property or something else, they have given the rights to some other contractor. So these are the transferable development rights. These are the services which is under the reverse charge mechanism. Then we have most important advocates services, legal services, which is under the reverse charge mechanism. Then newly added service renting services. that is also under the reverse charge mechanism, renting of the residential dwelling. These services are under the reverse charge mechanism, and among them, the major used services are the renting of the residential dwelling, director services, GTA services, import services, and ocean freight services. Ocean freight is mostly used by that client which are in the import-export business. And then director services is also widely spread services. Then GTA services. We will more deeply discuss this service because it is more important. So let's we discuss more about GTA services. GTA, what is GTA? So GTA is a unit or organization which provides the transportation of the goods by the road, landways, through landways, right? Just a second. These are the agencies who transport our goods. Sure. Okay. So we were discussing what is GTA. GTA is a form, is a constitution which provides transportation services by road. Transportation can be done through air or through waterways. So we are discussing about persons who transport goods through road. So there are so many exemptions given by the government in this reverse charge mechanism. So first we will discuss what are the exemptions given by the government. First exemption is given on certain goods which is necessary for our living. These goods are exempted from this taxation. If GTA unit transfers the goods irrespective of whatever number, whatever distance, whatever rent they collect, these goods are totally exempt. So these goods are agriculture product, as this all are the necessary products. That's why agriculture product, milk, salt, rice, pulses, food grains, then there is newspaper and magazines which are registered with the registrar of magazine. Then there is a relief material. If relief material is transported by the GTA, then there is no tax on that also, because that is also a necessary thing. Then there is a defense material. The transportation of this is also exempt. Then all the registered person who takes this transportation services, be it a company, be it a wholesaler dealer, or be it a retailer dealer, everyone who uses the GTA services for their business are taxable, and they have to pay taxes on them. But there are certain other exemptions which is given. Let's see that every registered person have to pay tax on the GTA services occupied or taken by them. But there are few exemptions which is given under entry number 21A to certain institutions, but they are not registered, but they are like factory hai, cooperative society, then a society, body corporate, and partnership firm who are not registered, but they still have to pay uh, tax on reverse charge mechanism. So these are the unregistered person, but they still have to pay the taxes. Then there is entry number 21B, on which certain exemptions have been given. So if a government who takes these services and who is registered under GST, but they are registered only for deducting the tax TDS procedure, then they are also exempted from this and they don't have to pay taxes. So this is a reverse charge mechanism, and in this GTA, and in which we have discussed where there is a exemptions. So apart from these exemptions, there are all the services which is given by the GTA. It's a taxable service, and on reverse charge mechanism they have to pay taxes. Now that is also one thing, that to opt for a RCM or not to opt for RCM is a choice given to the GTA services. The GTA unit has to decide whether it wants to go for a RCM or whether it wants to continue with the FCM, forward charge mechanism. If the one GTA unit decides to go for a RCM, then they have to give away the credit on the input. If they go for a concessional rate, in RCM there is a rate of 5% instead of the normal rate of 12%. So if they are opting for that concessional rate, then they have to give away the input tax credit which they pay to obtain certain things like and trucks and all, and they have to give away that input credit and use that concessional rate. So this is one major condition which is applicable on them. So this is a GTA services which we have discussed in depth. Then we have discussed director services, which is also a very important. We have discussed that directors who are not employee, only they have to pay the only on their payment, company has to pay the GST. GST is applicable. Then recently added RCM under residential dwelling, renting of the residential dwelling. So what is that? We will discuss in that now. Like a house is there in a residential area, and one person gives that residential place to use to a person who is registered under GST and who uses that premises, that house, for their residence as well as for their commercial usage. They done their work, their business, their practice from there only. Then it will be chargeable, and it will be under the reverse charge mechanism. Earlier there was all the residential dwelling were exempt who uses for the residential purpose, but from COVID this scenario occurs and everyone operates from home. Certain businesses operates from home, so this is a newly covered area in the taxation. Earlier, if there is a commercial place and it is used for commercial purposes, then it's already a taxable thing. So this is a normal thing, but this is something which is new to the everyone. So this came across to the government, and they bring changes in that also. So this These are all the services on which reverse charge mechanism is applicable and how the things work. Import ocean freight. Ocean freight is also very widely used and very important because in our area, Gandhidham, there is a Kandla port zone, SEZ have, or we have port over here. So we have so many clients that are into the import business and they pay freight. So we come across every client with every client there which have the ocean freight expense, and we pay RCM on them. So India has very wide coastline and ports are almost everywhere. So it's also a widely used concept. Then what is then we will discuss what what to do in RCM. So in RCM, we have to pay the tax amount, and there is a separate column given in every return for the RCM. What kind of services you have taken, the amount of it, and what will be the tax rate, and it will be described separately in every return. So while in outward side we show that we have sold something and we describe this RCM supply and we pay taxes on them. So we have to mention them separately. And there's one more thing, that we consume that services in for our business, and so we pay the tax on them. So it's our liability. But again, we use these products for our business, so we can take the input credit of the same. So both are our responsibility, to show it in our books as liability and to show it in our books as the input. So we have to show it in both the sides of our return, that RCM expense, that RCM thing, the services which are used under the RCM. So there are both the side in both the returns. We have both separate columns for the same, and there are concepts that we can we have to pay the taxes when we take these services, and we can take the input of the same at the same month or in the next month. That is option available with the service receiver. But there is one rule regarding this RCM. For the payment of this RCM, we cannot use our credit ledger. We have to pay it in cash only. Cash in the sense, we have to make actual payment for that from our bank account or through banks. But we cannot use the credit ledger balance for the payment of the same. So this is one major thing about the RCM which we need to consider, which we need to keep in mind for every time we file the return with the RCM. And it is only considered, the expense is only allowed in, and its ITC is only given to us if its payment is made in cash. In cash or bank, cash means we have separately paid the amount. So this is one major condition which we need to keep in mind. And like I said, we will discuss the accountability aspect of this RCM. So what is the accountability aspect? That if the service provider will not mention about the tax point of view in their invoice, because they are not charging. So what we need to do when we receive the invoice, we need to separately do accounting, separately enter journal entries, in which we will create one input asset, input ledger. We use a ledger named Texon RCM. So basically what we do, we do Texon RCM debit, input debit to Texon RCM. Suppose we have taken we have paid IGST. So we will entry, we'll make entry like input IGST debit to tax on RCM. Similarly, we have to pay the tax on them. So we will make entry tax on RCM to output IGST. So there are two entries, two things created. One is liability and one is input, and both are rotated through the ledger tax on RCM. So this is how its accounting is done. And for the clearance, for further reminder, we must mention in the narration that is of basic amount and its rate and its narration key of which expense we have made this entry. So this is accounting aspect of RCM. I hope you have understood this till the time. So we have covered what is the forward charge mechanism, what is the reverse charge mechanism, what are the goods and what are the services which are under the reverse charge mechanism. And then we have discussed 3 or 4 major services which are under reverse charge mechanism. We have discussed its accounting aspect, its impact on returns also. We have discussed that also, what is GTA, then what is agriculture, who is agriculturist. I think I have covered almost all the things about RCM. So if anyone wants to ask, anyone have questions, you are free to ask. So moving on, there is one more new concept which is now also widely used, and which is tax paid by the e-commerce operator. Nowadays, after COVID or during COVID, this e-commerce operator are widely used by everyone. We are dependent on them, and you all are aware about this e-commerce operator like Amazon, Swiggy, Urban Clap, Uber, Ola, Booking.com, GoIbibo, Make My Trip. I'm sure most of you all have used it. So there is one concept which is also very important, and which we will use it, and which will come across, and it will be a bigger part of our taxation system, because day by day these are all services we are using it very much in our life. Like if we want to book our tickets, we use Make My Trip, we use GoIbibo, we book our trips from Make My Trip, then we use Ola services of Ola, Zomato, Swiggy. Nowadays it's almost in every smaller city they are available, and people use it like crazily. like even housewives use urban club services. So they are, what are these units? They just connect two people, the person who provides these services and the person who wants to consume it. Suppose the driver that comes with the car is also he also lives in the same city, and the person who wants to travel, they are also living in the same city, but the Ola is just connecting them. So in this scenario, who will pay the taxes? And this is a major area, and government doesn't want to skip doesn't want to go away their revenue with this type of businesses. So they want to charge on them also. So what they have come across, they have created new provisions in this type of scenario. In this type of scenario, what they have come across, they told that that this Zomato, Swiggy, they have to pay the taxes, not that service provider, that restaurant, that consumer, but this Zomato owner, they have to pay the taxes. So this is altogether a new era of taxation, and we will surely we will be using very much in our practice. So in that case, what happens? There's one separate part in our return, and this electronic commerce operator, they have to pay the taxes on the sale, on that amount that they generated through this transaction, and they have to pay the taxes on the sale. There's one provision in this area, that is this Book My Trip, this GoIBibo. In this, if a hotel which charges rent for a single day, for a single room, any of its room, for more than rupees 7,500, then if we take services from Zomato, Swiggy, from from Make My Trip, from that hotel, then that Make My Trip doesn't have to pay the taxes. Then that hotel will pay the tax. So this is something new condition which we keep in mind. And other than that, if any new services which is given by anyone, then in that scenario, that service provider, that electronic commerce operator, have to deduct TDS or TCS while making payment to the service provider. So this altogether a new era of taxation. So we have discussed about this also. Right now there is only 4 sector and on which they charges taxes, that is accommodation, this food service provider, this housekeeping services provider. So we have discussed all this new era of taxation, which is also a major thing right now. Basically, we have discussed almost all the things under the RCM, all that 8 goods, 23 services, and this new 4 services also. That is one thing about rate on the RCM, which we also discussed, like 5% rate on ocean freight, then 5% rate, concessional rate on GTA services which opt for the RCM, and if they do not go or opt for the RCM, then there is a rate of 12%. So these are all the important topics about RCM. Anyone have any question or any doubt till this? I think I have covered sufficiently, and which is all the major aspects. So would like to conclude my session here. Yes. Yes.
Hello everyone, myself C. Garjana Rathod. Ma'am, there are few questions we have received from the audience. So I'll take one by one the questions.
Sure, ma'am.
First question is RCM applicable in cases of goods which are sent through courier?
No.
Okay, RCM is not applicable on the goods through courier.
No.
If there is any PPTPI, share PPT, no, okay. What if a person rent a building from one person and then he rented back to other? Is GST applicable?
Yes, if he is doing the business like which is common, because he is not using for his residence, but he is also further renting it. So it's a commercial thing, one type.
Transaction, right.
So
with your permission, can I add one thing to it?
sure.
Actually, GST is applicable. This is direct GST wala question. Because nowadays we see there is a concept of co-working space or incubation center. They often take the big premises on rent and they make shared chambers and all, which they give on rent to other people. So GST is applicable if the premises is taken on rent and given it back to other person on rent. Then there is another question where she has asked journal entry of RCM, please kindly explain.
Journal entry of RCM?
Kindly explain.
Kindly, okay. So suppose we have taken the transportation services of rupees 50,000. So what will we do? we will enter like transportation expense to transportation agency, the one JV of payable, and then we will pay. Suppose we have taken services from Kutch Transportation Services. Suppose this is a GTS name. So what will we do? We will pass one journal entry like of transportation expense to Kutch Transportation Services of 50,000, 50,000. Then we will pay the same for same amount like Kutch Transportation Services to cash of to bank. That is one expense entry of the expense and its payment. So this is one entry of our services taken. Then on that 50,000, suppose we have paid taxes of rupees 2,500. Then what will we enter? We will enter one journal entry of the our liability, which is created to pay the tax, because under RCM we are the receiver and we will have to pay the tax. So we will create one entry of the our output liability, our tax liability, which we usually do in the sales part, or in the sales we create our liability. So there is one ledger that output CGST at the rate 2.5% of 2,500. But what we will debit, we will create a ledger which name will be tax on RCM, right? So what will be the entry done for the liability part? For the liability part, entry will be tax on RCM to output CGST 2.5%. So liability is created for that RCM part, and then we will take the input of the same, because we have used it for our business purpose like other normal inputs. We will take input of the same. So there will be one entry of the input part. So what will be the entry of the input part? So it will be CGST input 2.5%, 2,500 rupees. And what will credit against it? We will credit against it tax on RCM. So basically, we have created the liability portion and we have created the input portion. So this is how the journal entry can be done, and accordingly tax on RCM will be nil, because we have paid that amount and we have taken that amount as an input. So these 4 entries will be done. If we compare it to the sales, suppose we have made sales, then what we do? We do entry like debtors debit to sales to output CGST, suppose. So we have created one output entry, output liability. So same we have done by debiting tax on RCM. And that there is there will be no entry of that party in it. We have just created one ledger, fictional ledger, tax on RCM, and we will do entry tax on RCM debit to output CGST at the rate 2.5%. And we do while taking entry of input, what we do? We do transportation. Suppose we do stationary expense debit, GST debit to that, suppose XYZ stationery, A to Z stationery, and that's how we have taken the input of that RCA, that tax portion. In the same way, what we do input CGST at the rate 2.5% to tax on RCM. So basically tax on RCM, this is how the journal entry can be done of the taxation part of that RCM expense. This both separate entries we have to make. So, and for our reference, we do what we do narration, and in which we write what is the expense, for what we have created this liability, for what kind of expense, and its basic amount, because basic amount cannot be found in the same entry, because normally what we do, what we do, stationery expense 100, input C GST at 9 rupees, and to XYZ stationery 109. So by going through this one entry, we can got what expense we have incurred, what amount we have incurred, and what is the rate of that expense. At what rate we have taken the input. So in one entry, we can get all the details, but in this type of entry, we cannot get the details. So we write it in the narration. So by passing this two journal entry, we create the liability and we create input, and the tax on RCM ledger will accordingly be nil, and our purpose will be served. So this is how the entry of tax on RCM can be done.
Thank you. There is another question which says whether GST is payable by receiver on income from YouTube or Facebook for uploading their videos.
Okay. Actually, I don't have any knowledge about this.
I think on
Definitely
billing
it's
part
not
there must
under
be some
RCM,
GST,
that is
because
for sure.
RCM, it is not covered under RCM. I think on
That
billing
is
part
not
there
covered
must be
under
some
RCM.
GST on that. There is one question from my side. Actually, currently in the last this 11th July wala council meeting, it was decided that the services provided by directors to the company in their personal capacity will not be taxed under RCM. So only services, or say if director's premises has been used by the company as registered office of the company, then whether RCM is required to be taken in that case.
Premises of the director is used as the business premises.
Registered office, right? And rent company is paying to the director. Then RCM is there.
RCM is applicable, yes, because premises is used, but it should be a residential property.
No, say director has got an office, and that office director has given to company. Company is paying rent on that.
But ma'am, that is office, right? So it's already a commercial place. It's not a residential dwelling.
Right, of course.
So RCM will be not there. It's a normal renting. So normal
GST
forward charge mechanism will be there.
But then see, in this case, if I say that director doesn't have a GST number, उसका और कोई income ही नहीं है जिस पे GST है then, और ये भी छोटा सा nominal amount is there. In that case, RCM will not be.
So he will be a service provider whose turnover is less than 20 lakhs, right? In service provider, the turnover must be more than 20 lakhs. So in forward charge mechanism, he doesn't need to pay get taxes. So it will be definitely under the forward charge mechanism only.
Okay, thank you.
Because in RCM, only residential dwelling is covered. The property which is already in residence area and for that purpose.
I, C.A. Darjana Rathore, on behalf of Women and Young Member Empowerment Committee, say vote of thanks to the speaker. You have covered the subject very lucidly. आपने practicalities बताई उसकी by taking live examples, by taking each and every service which is covered under RCM. At the same time, आपने payment mechanism explain किया that the credit, you can't use credit ledger for the same has to be paid by the transaction only. You have also covered the accountability under RCM. And last but not the least, you have also covered the entries, which is very tricky part so far as GST is concerned, because at times we also feel jumbled in those entries. So I'm really thankful to you for covering the subject in such a well-defined manner. I'm also thankful to the participants who have given their time for this program and who have patiently listened to this and have come up with the questions on the same. So with this word, I thank you all, and we can move on to the next session. Thank you.
Thank you.
Very good evening to all of you, my dear participants. I'm very happy to introduce to you CA Kinjal Shah. I can see that Kinjal ma'am is not here in the session. So we will just wait for a second. I think 5 minutes past 5 was her time. So I think she must be just joining in. As soon as she joins, I will be introducing her to the gathering. While in the meantime, I would like to thank you, Dimple ma'am, for your good deliberation on the topic. In fact, I got some very new ideas listening to you. So thank you so much. Yeah, as soon as Kinjal ma'am is here, I would just introduce her to you and then her to everyone, and then we will move on. I think we will wait for 2 or 3 minutes as she joins in, because I believe she's not there.
So we can question.
Very good evening to you, my dear Kinjal ma'am. I would request you to please put your video on. My dear Kinjal ma'am, I would request you to please put your video on. Dear team, I request you to please, I think, spotlight ma'am. Okay, so should we wait for her, or should I do the introduction part? Okay, thank you.
Hello, am I audible, ma'am?
Yes, you are.
Finally,
Yeah.
sorry for the inconvenience.
But we are waiting to see your lovely face.
Thank you so much, ma'am. But I don't know why my video is not visible. Uh, may I start with the presentation?
Okay, I'll just introduce you. Sir, can we go ahead? The coordinator, may I go ahead with the introduction? Okay. So good evening, everyone, and welcome to this Sky High Symposium once again. I'm CA Rachna Dubey from Bhopal, introducing CA Kinjal Shah. So Kinjal has been in practice since the last 4 years. She's a worthy member of our Institute of Chartered Accountants of India. She has also completed her DISA, that is Diploma in Information System Audit, recently, and her certificate course of Concurrent Bank Audit. She has also completed FAFD and has been associated with the leading mutual fund distributor, Kinjal Investments Services. Along with all these, there is one wonderful surprise that she is an avid dancer and she is also holding Visharad, which is a very high qualification in Bharatnatyam. And she does choreography of dances as well. So very happy to introduce to you Kinjal ma'am. And over to you now for your session on the topic for today.
Thank you. Thank you so much, Rachna ma'am, for this lovely introduction. Tech support team, can I just ask for allowing me to starting the video?
I think you can start the presentation.
But it shows you cannot start video because the host has stopped it.
Acha. Just a second.
Yes, I have. Okay. Let it be. Okay, thank you so much, sir. Okay. Hello, good evening. I'm C. Kinjal Shah. As we have entered in the month of August, that is month of freedom for India. So let's talk about financial freedom. So going with the presentation, what is financial freedom? That frees us from the financial burdens and which will, oh, my video came. Nice. So I'm just sharing this. Okay. Right. Okay, is it visible? Okay. Yes. So financial freedom, which can be achieved through investment. Investment horizon. These two words, investment horizon, is the term used to describe the total length of time that an investor expects to hold the security or a portfolio. Here, having said that, investment horizon is not just limited to the investment time period, but also the scope of investment. So we will discuss on two types, investment horizon, that is time period, and also investment scopes. There are numerous financial investment instruments for investment, like deposit in bank, saving bank, a recurring deposit, fixed deposits, loan to a friend, property investment, etc. We will discuss each one of them. Saving accounts and cash deposit may be a convenient place to share money, to store money over the short term, but will quickly lose the value due to inflation. So this is the risk associated with the deposits. So another option we can have loan to a friend or relative, in which we will lend our money to a friend and we will charge the interest. Property investment is also another option for investment where we can generate returns through the value appreciation of property or rental income. Investment in gold, silver, which is the traditional way of investing where we can park our money. But last, not the least, investment in capital markets. That is the talk of the town right now, which is broadly discussed in two ways, direct investment and indirect investments. Direct investments leads to directly investing in stock markets or share market, where we purchase shares of company, debt, bond instruments, etc. Indirect investments leads to investing through mutual funds, where mutual fund managers manages our funds, where we invest in mutual funds and they allocate us mutual fund units. Going further, there are few parameters which are required to be considered in deciding this which investment instrument is appropriate for us. So deciding filtrations are the concepts of asset allocation is playing one of the major role when it comes to investment. Asset allocation is the thing where we don't invest in one basket. We invest our investment in different segments. So we can get the benefit of diversification. Discipline is very important for successful wealth creation. Equities have been the best performing assets throughout internationally and also in Indian market. What analysis shows that in US market, there is like 55% of the economy investments are through stock market and mutual fund, where the penetration in Indian market is now still 5%. We have long way to go and more scope in investment. Markets have rewarded investments done at lower P across the time. Now, what does this P, dividend yield, price to book, etc. means? We will discuss further. Just to understand all these things, let's have an example. Let's see two people marry. While they live in the city now, they would eventually move to the suburb in few years, but they don't have the money for the down payment on a house. So they will start saving up. That's a short-term investment horizon because they need money for the down payment whenever they will select the home. So this will be short-term horizon. So they will probably want to go with the conservative approach where they will like a money market fund to avoid any sharp swings in stock market. Meanwhile, they have both taken advantage of their employees' saving funds or an employee-sponsored retirement fund where employer himself invests with the employee for the retirement benefit. So, since they are both young, that's the long time horizon. They can have aggressive investment. Given the length of time their retirement, they can afford to be very aggressive in their asset allocation, upwards of like 90% of stocks, as the long investment horizon should allow to recover the short-term downturns. Now, next, a baby comes along. Now they have to start thinking about saving for college. That's now a horizon will be for medium or long term, because for the child study so they can be pretty aggressive in the beginning and then turn to little more conservative for the high school graduation for child comes along. But there is government saving that allows contribution to grow tax free as long as they are used for educational expenses. So from whole this story, we can conclude that we have to choose our investment as per our goal, our time horizon, and accordingly, we should invest in whatever investment instrument is suitable to us. Now, going further, in earlier slide, we have seen that lower P have generated more return. P means market price divided by earning per share, as we all know. So for the share markets, Nifty PE refers to total market cap divided by earnings of company. Whenever this ratio is lower, we should invest. So we should penetrate in the market. And whenever this is high, we should sell our investments and book the profits. Now, what is the low PE and high PE? They have given some range that 40 or below PE is the lower one, where we can have opportunity to invest. While when PE is 25 or above, it is higher one. So we should keep we should not go for investing at that price. Now, why PE PB dividend yield ratio matter? As we say, opportunity for equity investor, that is low PE or low PB. PB ratio under 1 are typically considered solid investment. In general, dividend yields of 2% to 4% are considered strong. Here, there is one analysis where dividend yield is the highest, where the orange line shows the Nifty 50 PE, which is here. If I can note, yes. This shows the lowest PE, and we have achieved the highest dividend yield at this point. And this is inverse relationship with dividend yield and P ratio. Noted, stop, okay. So ideally, long-term investors who believe in value investing usually buy stocks when P reaches 40 or below and avoid buying when P goes above 22. This is one more analysis for Nifty PE ratio. This shows the Nifty PE data for 1999 to 2021, where we can see these are the 4 aspects regarding the PE ratio. Oops, sorry. This shows the very expensive, extremely expensive market where P ratio is 25 and above, where below 15 is the cheap, that is this cream yellow line. So if we have been investing in 2003 Jan, and we have just stayed invested, and if we want to sell now, like if we are in 2015 now, so we can generate return a much, because 14 P to the P 21. But at that time, someone comes and says, I have generated so much return. You can also, please come. He will invest at this P. And then in 2016, he is very curious about the return, but cannot generate the return because he has entered at the higher PE. So you should keep in mind that what PE ratio was there when you invested. So these are few examples where market was very expensive. Like in 2021, we have seen the market was like on helicopter, like moon. So P were 38, 40, where if people started investing there, and now market is not much giving, market is higher, but not each and individual stock generate return that much. So the PE ratio and PB ratio just help us to analyze whether are we right at time for the investing. Now, stocks and ETF. What does it mean? Stocks are one of the simplest investment opportunities to understand, because when you buy shares of a publicly traded company, you are buying a piece of that company's future success and weight or failure. You must keep in mind that when you are purchasing a stock, you are investing in the idea of that company performance, where that can be success or failure. So if you are being partner in the success, you should be ready for the partner in failure too. You make money as the stock prices rises, but you may lose if it falls. So this is the risk associated with investment in stocks. Now, there is traditional way where it is said that a person which is from technology industry or which is from textile industry, he knows his industry very well than other persons. So he will keep investing in the textile industry or technology share, because he knows when to invest, where the price is higher, what is it going to do for the future profits, etc. But say we all don't know about each and every industry. So what to do? We can analyze the price, company's document, annual reports, and from there we can take judgment whether we should go for this company's investment or not. Or this is called depth view, or another is breadth view, where we don't know, we are not confident enough to pick up the individual companies. Then it's okay. Exchange traded funds are the great investment opportunity to own stocks without having to pick them individually. Instead, they use a basket approach, because they don't invest in one company or one stock, but they go for the industry, like auto industry, technical industry, like Nifty index, etc. If we invest, तो मार्केट जैसे जैसे अप जाता है, वैसे वैसे वो रिटर्न मार्केट के अकॉर्डिंगली हमें जनरेट कर देता है. नेक्स्ट, time in the market. Now that is more important thing for investment. Time, it is said that time in the market is more important rather than timing in the market, which means कब इन्वेस्ट किया वो इम्पोर्टेंट नहीं है, उससे ज्यादा कितना आप इन्वेस्टेड रहे हो मार्केट में वो इम्पोर्टेंट है. Because if you stay invested for long, you can take benefit of ups and downs of the market. So for example, here there is one girl, Tiffany. She invested like 5 lakhs. Now market goes up, and at 75,000, or sorry, 7,50,000, she thinks it is okay, I can book the profit, and she books the profit. Now again market goes up, it goes to the 10 lakh, and she became upset because she thought that if I would have been invested and stay invested, I can generate more return. But wait, you should not go with this approach. When you are in the market, if you think, oh, मैं तो रह गई, या अगर मैं और रुक जाती तो ज्यादा कमा लेती, मैंने क्यों बेच दिया, ये स्ट्रेटजी से तो मार्केट में आप नहीं काम कर सकते, बिकॉज मार्केट का काम है अप्स एंड डाउन्स. यू शुड डिसाइड when to enter and where to exit according to your goal. Now here Brittany, she has invested like in 5 lakh. She stayed invested. Market goes up, उसे कोई फर्क नहीं पड़ता. उसे पता है मैंने लॉन्ग टर्म के लिए इन्वेस्ट करके रखना है, मुझे चाहिए अपने रिटायरमेंट बेनिफिट के लिए आफ्टर माय जॉब इज कंप्लीटेड. सो इट शी stays invested and then market goes go up down. यहाँ पे सारा कुछ market works like zigzag puzzle. And when the time comes when she want to redeem its investments, this time market is at this point, so she will be happy because she has generated the return. So कहने का मतलब है when you invest in the market and when you exit in the market, should decide what will be your return. Wait, ये एक सर्कल नहीं जा सकता क्या? एक 1 सेकेंड ना, ये इरेज कुछ ऑप्शन नहीं है. ये रहा. ओके, yes, here we go. Okay. Now another parameter, that is SLR, security, liquidity and returns. What does it mean with regard to investment? Security leads to my video is okay. Security leads to when we have invested capital, at least we should get back the invested capital again. That means if we have invested 1 lakh rupees and after 2 years we want them back, at least we should be sure that 1 lakh rupees will come back. Or it should not be like 1 lakh ka 80 ho gaya. So that is called the security risk, that our capital invested should be secured. Liquidity. Whenever we need money, we should be able to get it. That means you have 50 lakh rupees, but you cannot withdraw now. So what's the use of that 50 lakh? Because when at the time of need, if you are not having money in your hand, that is useless. So you should be able to liquidate them, to encash them. The another parameter is return. What would be return? 7%, 8%, 10%. So that is also a consideration to be taken care of. Now, these are the priorities. First, we should go for security, then liquidity, and then return. But generally, people go in reverse way. They go for कितना return मिलेगा यार? अच्छा, 20%, 10% कितना? हेलो.
बहुत नींद आ रही है क्या?
हेलो, गांधीधाम मैम, कैन यू मूव? टेक सपोर्ट टीम. Okay, thank you. Okay, so people go like reverse. First go for return, then liquidity, and then because they see कितना रिटर्न मिलेगा, 10%, 20%. आज डाला पैसा तो क्या 3 महीने में डबल हो जाएगा? So this all are rubbish things, because return is not like जैसे हवा में कहीं से आ गया. If we invest in something, it works. We should give time to it and it will generate return. For that, we should be sure that wherever we have invested, it is a secured investment. And if we don't want to stay invested for the decided period, and whenever we need our money back, we should be able to get back. Now, going further, the most important line, investments are subject to market risk. Read all scheme related documents carefully. ये मैंने यहाँ जितना slowly पढ़ा है, it is just like the reverse, because at every advertisement it is said, but it is read so fast that nobody can even understand or listen. So this line should be highlighted, and mostly first priority should be given to this line, because people go with the advertisement. Oh, it gives 10%, 20%. Okay, I will go with this investment. But when the market risk comes, when the economy goes down, nobody can perform. So that fund will also not perform, and you have to bear the consequences. So they have already written the scheme documents that it is associated with this risk. So if the market goes up, your investment may get returned, or else you have to go with the consequences. Now, as we have earlier discussed about investment in gold, as for women, it is said diamond, diamonds are forever, but they don't give that much value how much gold will give. So whenever even we buy gold jewelry, we go and say how much gold is there in, because when we will return them after a decade or after a few periods, we will get the money for the price of the gold and not for the price of the labor. So the pure gold investment is the something which can give us a return, which can be encased anytime. So there is one golden analysis. What does it mean? Let's say we have 10-gram gold. Now, if 4 persons are there in family, if we have to feed a family members of 4, generally expenditure for 1 month. In 1964, it was like 64 to 65, and the same was the price for 10-gram gold. Accordingly, we come to the 2008, where the price was like 20,000, 10,000 gold for the 10 gram. And that was the expenditure for 1 month for 4 people family. In year 2022, 10,000 gold come to 52,000. And we can see the comfortable life, if we want to live, we should have 52,000 at least for a month. So having said that, all this story concludes to, if we have invested 10-gram gold, at least we have hedged our 1 month expenditure. That we have seen in COVID that people were not able to work because of the lockdown and all. So if we have the investment of like this, we can encash them and we can survive. So 10-gram investment can lead to hedging 1 month expenditure. Words of wisdom. So, this is Warren Buffett, as we all know, the pioneer in investment. His famous quote is, "Be fearful when others are greedy, and be greedy when others are fearful." What does it mean? It means market is run by sentiments. Nothing can be judgment. No judgment can of a person can prove the market, because if market goes up and up, people say, अरे यार मार्केट बढ़ रहा है, अभी पैसा लगाओ, बनेगा दुगना बनेगा तीन. लेकिन जैसे हम इन्वेस्ट करते हैं फिर बोलते हैं, अरे यार मैंने जैसे डालना चालू किया ना तभी से मार्केट डाउन होना स्टार्ट हो गया. ऐसा क्यों होता है? क्योंकि वी हैव गो विद द फ्लो. लोगों की बातों में आके हमने मार्केट में इन्वेस्ट किया, एंड देन मार्केट का भाव फिर गिरने लगा. हमें वी शुड नॉट गो विद दिस people's talk or rumors or sentiments. Market should be market is run by sentiments, but our investment pattern should be according to our goal, time horizon, analysis, etc. So when people say यार बेच दो अभी स्टॉक अभी तो बहुत प्राइस आ गया है अभी इससे आगे नहीं जाएगा बट इफ यू आर श्योर योर एनालिसिस योर टेक्निकल नॉलेज सेज नो मार्केट यहाँ से भी आगे जा सकता है तो प्लीज कीप इन्वेस्टिंग and stay invested. So whenever the time comes, you can generate the return. There were brilliant opportunities like Jeff Bezos, Steve Jobs, Bill Gates, Larry Page, Sam Watson. Who are they? They have just analyzed the startup idea of few companies like Amazon. When people didn't even know about what is Amazon, the company was just in its baby step, initial stage. Jeff Bezos has been one of the founders in Amazon and started investing in it. Now, Amazon is one of the most successful sorry for the disturbance. So Jeff Bezos has found out this company like Steve Jobs. He has invested in Apple when nobody knows what is Apple. And now the results is in front of us. Same as with Microsoft company for Bill Gates, Google for Larry Page, and Walmart Sam Watson. So whenever we say we are trying to invest in a startup or a initial company stage, we should become that Johari that said, हीरे की परख जौहरी को होती है वैसे the compatibility of that company, how it will perform, that we should be able to justify. Now, the takeaway. What we can take away from this? Choose your investment opportunities wisely because as you can see, there are plenty of diverse investments opportunities out there. Finding the right one for you depends on where you feel most comfortable putting your money. Look at your tolerance for risk, the amount you want to invest, and your timeline for investment. Then choose the investment that best matches your outlook. Every investor needs to carefully evaluate their own goals and investment timeline before deciding where to put their money. Saving accounts or cash deposits may be a convenient place to store money over the short term, but will quickly lose their value to inflation. Where conversely, aggressive investments in the stock market will generate high expected returns in the long term run, but they will remain susceptible to short-term market fluctuation because it is always said that market is short-term volatile and long-term stable or good. So it falls on each investor to decide that the optimal balance of risk and rewards. So we have to justify both the risk and return. And last but not the least, as Warren Buffett says, the best investment you can make is an investment in yourself. The more you learn, the more you will earn. Because for investment, what we expect whatever we give, we get back something more from that. But if you invest in yourself for your study, for your experience, and that will surely give you return in tremendous way. So investment in oneself is always paid off. Thank you. And anyone have query? They can ask.
Thank you, Kinjal. I mean, I have not yet received any query regarding investment horizon, but I have single query from my side.
Yes, ma'am.
See, investment horizon, as you rightly said, that you have to look at things from security angle, liquidity angle, and return angle. So
Exactly.
what do you think if, see, there are three basic important things for which we plan our investment. It can be short term for say 3 to 5 years, or long term for 8 to 10 years, or retirement plan.
Right.
If I think of investment from say 3 to 5 years perspective, what according to you can be the best option for investment?
According to me, actually for 3 to 5 years,
Yeah.
if you are going to investing right now, you have to balance, like you can go for a balance fund where the debt and equity both, because debt fund and equity in the mutual fund, if you can, we can say just like mutual fund. तो म्यूचुअल फंड में कैसा है कि डेप्थ में कुछ क्राइटेरिया फिक्स किया हुआ है, बैलेंस फंड में कि हाँ बैलेंस एडवांटेज फंड हुआ अगर आपका, तो वो डेप्थ में इतना इन्वेस्ट करेगा और इक्विटी में इतना इन्वेस्ट करेगा.
राइट.
इन्वेस्ट करना मतलब वहां पे अपना शॉर्ट रिटर्न है और लिमिटेड रिटर्न है, बिकॉज डेप्ट इज समथिंग काइंड ऑफ लेंडिंग. सो हम कुछ कूपन रेट्स या बॉन्ड पेपर्स इंस्ट्रूमेंट्स खरीदते हैं जो हमें 3 साल में पकते हैं या फिर 4 साल में, और उसका फिर 8% 9% जो भी होता है वो रिटर्न मिलता है. उसके सामने हमने अगर इक्विटी में इन्वेस्ट किया है, क्योंकि वो बैलेंस एडवांटेज फंड में क्या होता है, अगर 100 रुपीज हमने डाले हैं तो अगर 60 पैसे उसने डेप में डाले हैं तो 40 रुपए वो इक्विटी में डालेंगे. तो इक्विटी 4 साल में अप भी जा सकता है, डाउन भी जा सकता है. उसी को री इन्वेस्ट करके वो फंड मैनेजर का काम है, वो हमारा काम नहीं है. पर जो भी डाउनफॉल होगा उस टाइम पे हमारे पास जो वो 60 रुपीज डाले हुए है उसका 8% तो जनरेट हो ही रहा है कंटिन्यूसली, तो वो हमको सेट ऑफ करके देगा. सो ऑन एन एवरेज फिर हमारा 12% जैसा रिटर्न जनरेट होता है. इट इज जस्ट एन एग्जाम्पल. सो अगर आपको 3 to 5 years के लिए जाना है, so I can say you can, and one more thing, you should not keep all the eggs in one basket. So मैं ऐसा नहीं कह सकती कि अगर आपको खाली गोल्ड ही खरीदना है या फिर आपको म्यूचुअल फंड में ही जाना है. थोड़ा पैसा आप डालें म्यूचुअल फंड में. जैसे हमारे मतलब ट्रेडिशनली ऐसा कहा जाता है, इफ यू अर्न 1 रुपी तो 25 पैसा आप बैंक में डालो, 25 पैसा आप कहीं प्रॉपर्टी में डालो, 25 पैसा आप किसी को जरूरत है तो अगर उधार पे ब्याज पे दे सकते हो तो दो, या फिर बैंक या फिर और कोई इंस्ट्रूमेंट में डालो. वैसे वैसे करके आपको डाइवर्सिफिकेशन कर, क्योंकि एक मार्केट टूटेगा तो दूसरे मार्केट में अगर बूम होगा तो उसका हमें फायदा मिलेगा. सो अकॉर्डिंगली आई थिंक वी शुड इन्वेस्ट इन दैट वे.
Thank you so much, Kinjal. I'm really thankful to you, Kinjal, that you have actually provided us the insight on the time period of holding. You have covered small things like PE, like ETF, stocks, all the small terminologies which are used in stock market, which a person who is actually not dealing with the stock market might not be aware of. So you have taken those, all the small things. Then you have also covered asset allocation, the power of discipline, how and why one should be disciplined. The best part was the examples,
Yes.
because we understand more by examples. So
Yes.
definitely if marriage is on the cards, so you have got different goals. And if the retirement is on the cards, so that the goals are quite different. You have also explained the term, like at what time one should plan and enter and at what time one should exit.
Yes.
And last but not the least is the last quote of Warren Buffett, that is investment in ourselves. So definitely for anyone, is investment in himself or herself is the best investment possible. So with this word, I thank you from the bottom of my heart. I thank WIMEC committee for organizing such a wonderful session. And I thank all the participants who have taken out their time and attended this session.
Thank you so much, ma'am. Thank you.